Hi, my name is Dylan Brown, the host of Coffee Flavored Crypto. This is where you can get the latest crypto news, project reviews, and crypto trading edutainment. Learn about different altcoins, historical Bitcoin cycles, and get the latest in everything crypto. Follow our other social media, specifically our Twitter. That is C_F_crypto. Again, C_F_crypto. Stay up to date with us, guys. Keep watching. I got more for you. Sponsored by Body Brand LLC. So, over the last decade, Bitcoin and cryptocurrencies just in general have continued to push ahead as a new frontier in financial engineering. Today, in this video, I'm going to explore the decoupling of Bitcoin and inevitably the rest of the crypto market from traditional markets. So, this will show that Bitcoin and the entire crypto market has different reactions to federal rate hikes, inflation increases, and energy demands, with many other factors coming into play. So, will the crypto market decouple from TradFi? You will see here shortly. Let's check out the video, guys.
With the S&P 500, the Nasdaq, as well as gold. What does that say about, will we see a decoupling from BTC from the more global macro traditional market perspective?
Yes, we always kind of like to look at the correlations because sometimes we think, or people will say that.
So I'm going to stop the video right there. So as we can see, we see a couple of charts. Guys, we're looking at a correlation chart they're showing. The yellow line, as you can see on the screen, is showing BTC compared to the S&P 500 as of March 2022. It's around a 0.4 correlation, semi-correlated, not at a 1 yet. We see BTC gold in the blue, negatively correlated here, and then we see BTC Nasdaq in the, I would say, dark blue or black even at 0.5. So you see Bitcoin's not necessarily correlated to any of these markets because it has its own unique tokenomics, and I think it's good that they brought this up. So I think it was good to stop there. So I would also like to mention Bitcoin leads the crypto market. And looking at this chart, BTC is showing that the crypto market does not necessarily correlate directly with the S&P 500, the Nasdaq, and especially not gold. So in my opinion, BTC may take the place of gold in the upcoming years as an inflation hedge, due to its tokenomics like I talked about before, and eat some of the market cap that gold holds today, growing the entire cryptocurrency market. So let's continue.
Bitcoin tends to move in line with the market, and while that can be the case for over short periods of time, as we can see here on this chart, the correlations don't tend to be very strong with the S&P, with the Nasdaq. We had early January. Of course, we had a sell-off in the market, and then correlation spiked across the board, across asset classes. But that's since waned a bit, and in fact, gold's completely gone off in a separate direction as inflation expectations have increased, and we have deeper negative rates. Then the opportunity cost of holding gold as a store of value falls, and that's why it's been outperforming. More recently, in the last few days, we've seen the correlation with the markets, with the S&P, with the Nasdaq, trend back up a little bit. Again, on the back of this comments from the Fed, the minutes from the Fed, and the rout in the bond market. However, if we zoom out longer term, there have been great studies done around this, and I can cite, for example, the Bitwise study done last year, where they looked at a traditional 60-40 portfolio from 2014, because before that, adoption of Bitcoin was perhaps too small to really be substantial enough to study.
So I'm going to stop the video right there again. So I think we can draw some conclusions from what she was talking about. Bitcoin will soon decouple more from things like the bond market due to investor psychology, basically. So investors will see the bond market and traditional markets in general is basically in a state of hyperinflation. Furthermore, the rising rates making things like real estate and certain things like equities less attractive as an asset class. So, likewise, if rates are rising, blockchain and crypto therefore become a very attractive, if not the best asset class to park cash into. Um, so basically, that concludes like that interest rate oriented products, like I was talking about before, are affected by these rising rates by the Fed, unlike Bitcoin in this case. So let's continue the video right here.
But from 2014 onwards, they looked at portfolio and adding to a traditional 60-40 portfolio 2.5% holding in Bitcoin, and found that it improved returns by almost 19 percentage points, which is a huge amount.
Martha,
Without,
I just want to plug in
yes, go
there.
ahead.
You sent us one more thing about unspent transaction output, and we see that is surging. So, what does that tell us about the price?
Yes, this is what I was commenting earlier. Is we think is quite a nice chart to look at, and it's one element that we would look at to create an overall picture. It wouldn't be, I would emphasize, it wouldn't be the only thing that we're looking at because there are many elements that go into the analysis. But this, along with the exchange outflows, I think is interesting at the moment, and we're seeing almost, highs that we haven't seen in several years in terms of wallets holding Bitcoin for over a year.
Okay.
And that we're at 63%, just a tad over 63% today, I noticed. So we're watching at what point we're going to cross that record that we had in 2020. And you can see from the chart that during a weak market, people were accumulating, holding their Bitcoin, and then when the price started to rally, they started to sell into that strength. And then when we went into a weak period again, they started the accumulation phase, and that accumulation phase can last for quite a few months. It doesn't mean that necessarily tomorrow we're going to get a rally in Bitcoin, but the longer it holds at these levels, the more bullish the signal for Bitcoin.
All right, guys. That's the end of that portion of the video. I got more stuff coming on, but to close out this particular part of the video, I think we can conclude that just with macro trends like elevated inflation or just the overall geopolitical tension around the world, we will continue to see the adoption of Bitcoin and cryptocurrencies alike due to its strong use case in these scenarios. Thanks.